I'm Justin from My Mortgage Trainer. With the feedback I had on our last video on debt-to-income ratio math, we decided that we needed to jump a little more into details on a borrower's income types, their history, and how to properly calculate their income when you take the SAFE MLO test. A borrower's income provides them the means to repay a mortgage debt that they applied for, their other long-term debts, and everyday expenses. With the updates to the mortgage lending laws, including the requirement to verify whether or not a borrower has the reasonable ability to repay a debt, it's very important that we verify the source of a borrower's income when we're qualifying them for a loan. So when we're taking an application, we're going to have to collect a full 2-year employment history for our borrowers. And when I say this, I mean a full 2-year working history. If we have any gaps of employment during that most recent 2 years, we're going to have to get a letter from the borrower explaining that gap, as well as look a bit further just to make sure we can build out a full 24-month history. Let's cover some rules on when employment sources are able to be counted. Most of the time, your borrower's income source is going to be able to be counted as soon as they receive that income, but there are times where that income will have to meet specific requirements. Now, I do want to start with a disclaimer up front. This video is really only for test prep and general guidelines. Once you have your license, you'll want to make sure you double check with your program guides and their requirements, as there generally is a difference between what you'll find in the real world versus in the test world. As a general rule, the following income sources can usually be counted immediately. So salary or stable hourly pay, Social Security income or disability benefits, pensions, and even housing allowances. These are going to have a little bit of nuance to them, and you'll need to double check your program guides for that proper documentation. On the screen here, I'm going to put some ways that you can properly calculate the gross monthly income for these types of income. You should see that now. When you have a borrower with a variable income source, will generally be required to show a full 2-year history of them receiving that type of income. A few examples of this are going to include, but they're definitely not limited to, overtime, income from a second job, bonuses, commissions, rental income, capital gains, and self-employment income. So when we're dealing with these variable income sources, we're usually going to have to average that income over the last 2 years to come up with that borrower's qualifying income. Now, self-employment is going to require a bit more documentation if you're going to use that. If your borrower owns 25% or more of a business and is going to use that income to qualify for their loan, we're going to be required to get tax returns for that business. The underwriter is going to use this to help determine the stability of a borrower's income, the financial strength of the business, and their ability for that business to continue generating enough income and distributing enough income for that borrower to be able to make their payments on the requested loan. When we're calculating a borrower's income, we're always going to calculate their gross monthly income to calculate their debt-to-income ratios. With this, there are times where a borrower may have income that isn't subject to federal income taxes, such as Social Security benefits where the borrower's other income doesn't exceed a certain amount, child support, and most military allowances. When the income is verified to be non-taxable, and the income and its tax-exempt status are likely to continue, we're able to use an adjusted gross income for this borrower by adding 25% of that non-taxable income to the borrower's income. This is called grossing up. Now that you know the rules on calculating income, go check out our video on calculating debt-to-income ratios if you haven't already, or one of our other NMLS test prep videos. And if you haven't already, make sure you subscribe to our channel for more test prep videos and other industry-related content. I'm Justin. I'm out.